What's going on, apes and apettes? Welcome back to the channel. AMC is down about 2.5% currently, but rest assured, we have never been closer to the MOASS than where we are at right now. Let me explain this for you guys in about 60 seconds. So 4 months ago, on the community page, I said, is everyone aware of the Evergrande situation and what that could mean for global markets and how the overall markets coming down will cause the big hedge funds to cover their short AMC shares? By saying this, I said the market's coming down. So obviously, AMC is going to follow with it. It's going to correlate the overall markets to a certain extent. Markets crash into the ground, AMC also going to crash into the ground. But at that point, that's when you are primed to see short squeezes, not just in AMC, but in other stocks as well, because capital is scarce. So yes, for those of you guys that are diamond hand apes, I firmly believe in my heart and soul, that's why I have my money invested in AMC, that we will all be rewarded, but there is going to be pain before there is gains. Think about this like a rainbow. You got to get through the fucking thunderstorm, right? Tornado, whatever the hell it is, to see the rainbow, and then follow that motherfucker to the leprechaun with a pot of gold at the other side. Hopefully that made some sense to you guys. Kind of. But let's dive into what the data is for the day, because the short interest is getting way up there at 20.27% currently. Keep in mind, we have not been over 20% since the sentiment date June 15th. So we're looking more bullish now than we have since June as far as the short interest is concerned. You're also seeing a big spike to the days to cover. Take a look at this little leg up that you're seeing right now. This is incredibly bullish because this is giving you a glimpse into where the short sellers sit. If you're a short seller, what really matters to you is obviously how over leveraged you are, but besides that, it matters what's the volume like? How hard is it to cover on our short positions if we had to? And what this is telling you, the days to cover shooting up and at all-time highs from when we ever, seen rallies in AMC, significantly above January and even more significantly above the June rally. It's telling you that it's very hard for shorts to get out of their short positions when they are forced to. And that's what drives big increases to share value. It's how rapidly are shorts trying to get out of their position? Do they have to start bidding up and paying astronomically high prices to get out of their short positions because there's just not enough shares available to be bought to cover on that short position? So hopefully that makes some sense to you guys. And this is a ticking time bomb. There is a direct correlation, like I said many times, with the days to cover being high and dropping dramatically, whereas the price of the stock is going up at the same time. So they are correlated, but they do the opposite, right? They're discorrelated, for I guess a lack of a better word. So you've seen that in January, you've seen that in June, and now we're just waiting for that to happen back here. And liquidity, like I said, is being restricted. Over 36% of NASDAQ stocks are down over 50%. So if you're looking at the indices as a whole, which are not doing too great today, which we will talk about the bank earnings and all of that situation to know for the rest of this week, but people are down quite substantially. Money is getting a little bit more scarce. And there is word on the street, there is rumors on the street that the Fed is going to raise interest rates 50 basis points by 0.50%, by 0.5% on this January meeting. It's not expected they will raise rates at the January meeting. So if that happens, expect a sell-off in AMC, expect the markets to drop, but expect liquidity to be at its lowest level in over 2 years, and that's when you're primed to actually see the AMC MOASS. Because let me also clear this up for you guys. Yes, a lot of money is still out there, but it's parked in the top 5 stocks. Really, I think Apple is really holding up the markets right now. Apple alone accounts for 12% of the market weighting of the NASDAQ. Apple over the past 3 months is up over 20%, whereas everything else, 36% of stocks are down over 50%. All of the money has flown into Apple, trillions of dollars, and that once Apple starts to go, everything goes. That's the big domino that starts the whole chain reaction. So Apple's earnings are going to be January 27th. So I do believe that's next week. Let me clarify this for you guys. Yes, next week. We also do have the Fed meeting, the 25th and the 26th. The next day later is Apple's earnings. So that's going to be a very important week next week, and I think that's when you could actually start to see the first leg of the MOASS. Obviously, I would not be trading options off of this because there's about a 709,000 calls that are out of the money, and I think this is just a good lesson for people that you shouldn't trade options unless you confirm the MOASS is actually happening. Because when it's happening, it helps the movement. When it's not, you're helping the market makers. You're helping the shorts to stay in their short positions. Now, let's talk about the overall indexes. AMC down 3.26%, but the indexes are just cratering into the ground yet again today. It's not a big move to the downside. The SPY only down 0.27%, but look at this. We were up quite substantially in the beginning of trading, as well as on the NASDAQ, up about 1%. Now the NASDAQ is down 0.25%. So we did a full 180, 360, double top, double drop flip in the indices, and now that's what they look like. This is what you look like, just a landslide straight down. And we did have good earnings. Morgan Stanley posted good earnings. Bank of America posted good earnings. The other banks yesterday posted bad earnings. So this should have been somewhat of a neutral effect, but even though it should have been, it's not. So there's deeper issues here than just the bank earnings. Once we get into the Apples of the world, the Facebook, the Microsoft, the Tesla, Nvidia, the big companies, Amazon, Google, that's what's going to really dictate what happens to the markets. If earnings are above expectations, everything looks great, growth is not slowing down, then hey, the markets, we're not close to the MOASS. They're going to continue to rally. If they come in bad, oh, sweet, sweet tendies. Put them babies in the fryer and get the sauce ready, baby, because it's going to get very good, very interesting. We could drop even more, though, if that happens. I'm not saying it's going to happen right away. I'm saying during that time period, we are at those lows. That's when the MOASS is going to happen. And I have been so consistent here on this channel with that saying, that the only time the MOASS will actually happen is when liquidity is restricted. And nothing has changed. It's the exact same thing. So that's exactly how I'm looking at this. That's how I am personally trading this. As far as throughout the rest of the week, we do have some more earnings that are coming out. Not the big companies. The big companies' earnings start next week. We also have, like I said, that Fed meeting, and that is what is going to dictate the markets. If the Fed does surprise the markets, expect to see AMC go down. If they do walk in a narrow line and earnings are good, then expect the markets will probably bounce. But there's a lot of analysts calling for the Fed to do this surprise rate hike to kill, basically sacrifice the markets and let them fall probably 20-30%. But to get inflation expectations under control. Because when it comes down to it, inflation expectations are more important than inflation, because if nobody expects inflation, companies don't raise prices and you don't actually see that inflation. If people expect inflation like they have over the past 2 years, companies raise prices, then you actually see inflation. So hopefully that makes some sense, you guys. I know I'm throwing a lot of information out for you. Let me know down below in the comment section if you guys don't fully grasp something that I am saying. But this, in my opinion, is not the time to be panicking. This is the time to be sitting back and actually relaxing, because we are very close to the MOASS, in my personal opinion. And obviously, I've not sold anything, and I will not sell anything. I'm either going down like the Titanic with you guys, or we're all going to get rich. There's no other way around this. I'm already down like 50% in total. My average is in the mid-30s. So, feeling some pain, but you should be happy about what we're seeing at the current moment. As far as AMC and the technical analysis, like I said, I have these lines drawn up at about 1750 for this lower end line and about 1850 on this higher end line. We are, approaching 1850. We're at 1860 right now. So I don't expect a big move under this until we get into next week, really. Could happen tomorrow, could happen Friday, doesn't really matter. You should rejoice in the fact that liquidity is actually being restricted. As far as the MACD, slightly bearish, Not too crazy, not as bearish as we've seen back here, which is surprising because we're selling off even more than we were back here. So pretty interesting right there. As far as the Bollinger Bands, where we do need to break out above, if we do start to see the MOASS or some kind of event or catalyst that does cause AMC to rip, it's going to be about $23 per share, and then this 20-day simple moving average is going to be more important, and that's at about $24.74 per share at the current moment. So watch those levels, upper end range at about $29 per share as well, and then the 50-day, 100-day, and 200-day moving averages, but we're pretty far off, $30 to $35 per share right now. But that's basically going to be all for this video. As far as the volume for the day, still incredibly low at 16.5 million. So rest assured that apes are not selling. If you want to see when apes are selling, watch for the volume to come in. If you see 100 million shares that trade hands and the stock's down 20%, apes are probably selling. If it's 16.5 million shares that trade hands and the stock's down 4%, apes are not selling. That's the simple fact, and that's what obviously financial media is not going to tell you, but that's why we have YouTube, and that's why you should subscribe to the channel if you are not already. Isn't that crazy? Hit the like button, comment down below. Love and appreciate you guys. If you guys want access to all my trades in real time, we have been doing exceptionally well over there. Check that link out, link down below in the pin comment, as well as if you want to get yourself some free stock. If you're not signed up with Moomoo, Public, and Weeble, check those out. Link down below in the description of this video. Love and appreciate you guys. Thank you for watching. I will see you in the next one.